Hello. All right, guys. So once again, welcome back to my channel. Um, tonight I'm going to bring you a quick review on the synthetic volatility pairs. It's been quite some number of days you heard from me. Um, yeah, I've been on the market. I've been on the chat. I'm always on the chat. I'm always on the market. Sometimes I get preoccupied with other stuff that prevents me from getting you videos, all right, and updates and getting you lessons for studies, all right. So tonight I'm going to try my best to give you an update and then a lesson as well. Anytime that I post out videos, I'm expecting that even in the course of the lessons, you are getting to learn a few things that you have to learn, all right. So tonight I'm on a volatility 25. So I'm solely on synthetic pairs, all right, and I'd encourage that all the strategies that I use in analyzing the chart, or the strategy that I use in analyzing the market can be applied on any asset pair, all right, can be applied on any asset pair. So basically, I'm a child of ICT, all right, and for most people out there and have their own doubts about ICT, inner cycle trader, and his strategy, and feel it doesn't work. I mean, I think for most of you, you haven't been able to join the puzzle together. All right. So, I mean, on my channel, I believe that you get to also understand a few things that you have been struggling with trying to understand ICT's videos. All right. So quickly, let's go into the video, and I know that I'll mention a few things as we go along. All right. So quickly, today we are on volatility 25. So today I'm going to bring a quick weekly update, and we forecast what we are expecting, or what our expectation is for the week ahead. All right. So pardon me for sometimes having to speak a lot. I don't know any other better way to try and explain things for you to understand them than the way I have to do it. Right? So, for those of you who are new to my channel, I say you're welcome. And for the returning viewers, you're also welcome. So, let's go straight to the video. So, tonight we are looking at volatility 25 synthetic pair, all right, offered by the Reeve broker. I'm not here to promote any broker. You know, you can trade with any broker you want. All right. So we are looking at volatility 25. What are we expecting? And in my previous videos, I made mention of what we're expecting, or what we're going to look at when price dipped into this area. And I told you that we're looking at price taking this high in here. We're looking at price taking this high, and beautifully price did that. As you can see, price already took down this high, the high in here. You can see how price has dipped into this high and taken down this high. Why did I foresee that? I foresaw that because price dipped into this area, or closed in on this gap resting in here, you know, the liquidity resting, the imbalance. Price had to rebalance itself in this imbalance here. Okay, this is a buy side imbalance and a sell side inefficiency. All right, what is it? So here we are saying that we have price trading only once to this direction. Okay, it traded just once. So you could see that on the market, when price trades from this side all the way down, it trades back up. So in this area, it is a balanced range. Okay, so we have a price trading downwards, and then another way trading upwards. Okay, so we have a balanced range. Now when we have an area such as this, where price trades only down, so for instance, let me give you another balanced range. We have price trading upwards, coming down, and then price trades above. So this side is also balanced. Okay, now we have price trading from this point, from the high of this candle in here. Price traded up and never returned. So as price traded up, the following day it traded down towards this area, and then it rallied back up. So we had this area which hasn't been traded through, okay, or which hasn't been, it has been traded once. So there was only a buy action here, and to have a balanced market, we have to have a buy and a sell. Okay, so we call it an imbalance. Okay, so it's a buy side imbalance and a sell side inefficiency. So it is inefficient for the sellers. So now the sellers have to look for efficient market delivery. So now the sellers also come in and then they deliver and they make the market become efficient. Okay, so that is how the market works. Now the market had to take in this side and then it closed in on this small inefficiency also in here, and there's another inefficiency below this area, which I mean we'll delve deeper into that later. And then what happened? So the market delved into it and then we rallied back up. So here, let me zoom out for you to see that in actual fact, sorry, I was looking at this side instead, that there was an inefficiency in here. Okay, so price had to dip into this inefficiency as well, and then it rallied back up. And as price has taken inefficiencies or price has rebalanced itself, now we are seeking for price to take highs, okay, to run the highs and the lows. All right, so here the directional bias of the market or the order flow was bullish. So in as much as the market has retraced into this area, taking the inefficiencies down, we look at price coming back to take on this high. And price has beautifully done that, has delivered what I was expecting. And what next? So after the delivery, after the price, after market has done the delivery, what next are we expecting? So price has taken, so if you watch my previous video on, I posted a video trying to explain order flow, okay? I tried to explain the higher time frame premise, how the market actually moves, okay? And we looked at internal and external liquidity. So that is what is being applied here, or that is what is applicable here, right? Okay, so we look at internal liquidity. So all the imbalances, okay, the inefficiency, the imbalances are regarded as internal liquidity, okay? And then the external liquidities are basically the highs. Okay, external liquidities are basically the highs and the lows, right? So I told you that if market takes down internal liquidity, our next point of call is an external liquidity. So I was targeting this high. In as much as we were in a bullish environment, I was looking at this high, and beautifully price did that for me. Okay, and what's next? Now let's go to our monthly time frame. Okay, monthly time frame. I would record a video and show you on time frame alignment. Okay, time frame alignment. I'll mention it briefly here, but I would record an extensive video on time frame alignment for you to get a proper feel of what the time frame alignment really is about. Okay, on the monthly, you could feel that the order flow is bearish, right? The order flow on the monthly time frame is bearish. So insofar as price has rallied up in here, taking down this high in here, we are looking at price coming back down. Okay, so let's regard something here. Let me pull a fib from this high all the way down to this low. Okay, so when you consider this high in here to this low, where is the 50% level, or where is the equilibrium, which is this side? Now, has price traded above equilibrium? Yes, it has traded above the equilibrium price. And on the monthly time frame, we are looking at a bearish situation here. So, okay, the order flow on the monthly is bearish. Now, if I see this price above equilibrium, so it is in a premium price. So if you go to my videos, so I have a video called Premium and Discount Prices, okay? Premium and discount prices. These are one of the things that has been taught by my mentor ICT. All right. So if we are in premium, that's where we seek for our sell. Okay. And in a bearish environment, okay, when the order flow is bearish, when price is at premium, that's when we seek for our sales. We hunt for sales. Okay. Now, so above this line is the 50%, and we are in premium now. So we have to hunt for sales inside this area. Okay, so from this high all the way to this low, we are in, we are currently at a premium price. All right, so we'll look for sales. All right, beautifully. So even if you take the line from the fib from this high all the way down to this low, we have still touched the 50 level. Okay, we've still touched it, and we are looking for our sales now. Now let's take this off. So if you've understood that we are currently at a premium level that we are looking for sales. Okay, coupled with the fact that we have a breaker in here. Okay, we have a breaker hiding in here that price has traded into deeply into this breaker. So you could see how the reaction of the candles in here towards the breaker. Okay, so it's a good place to hunt for sales. Okay, all right. Now, the monthly time frame has given us a breaker. Okay, has given us premium prices. Now, let's go down to our weekly time frame to see what we could do. Weekly time frame has also given us a clear sign that we have swept a high. Okay, we have taken an external liquidity. Where will our eye be drawn towards now? Our eye will be drawn towards seeking for internal liquidities. Okay, so now let's go down to the daily time frame and see what we can also glean from the daily time frame. So on the daily time frame, we could see that there is this imbalance in here, which is price traded to this side and continued up. It means that all this area is an internal liquidity coupled with this internal liquidity resting in here as well. Okay, so these are all internal liquidities that can be grabbed. Now, on the monthly time, on the daily time frame, we have this setup. Okay, price dipped into this area and then it rallied up to take a higher time frame PDRA. Right. Now, if price has done that, what should we do next? From the daily time frame, I go straight ahead to 4-hour time frame to check if where we have gotten to, we have had any structure shift. Okay, if we have had any structure shift. On the 4-hour time frame, the picture is not so clear, so I'll go back to my 1-hour time frame to see if I've had any structure shift. And clearly, open your eyes. Can you see any structure shift happening in here? Yes, obviously yes. So on the 1-hour time frame, we have price moving this way all the way down here, came up, and then came to form this low, up, and then came to form this low. Now, this was the low that was formed, okay, prior to this rally up here. Now, do we have price breaking above this high? Yes, it did. So we have one type of market structure shift. Now, let me show you where the structure shifted. So the structure shifted right in here. Okay, the structure shifted right in here. And what are we expecting? Our expectation is that, okay, now that structure has shifted. What do we seek to do? What do we seek to do? So we seek for price to return into an ultimate trade entry, and then we engage the market. And then we engage the market. So now that we have had a clear shift on the 1-hour time frame, what do? So we wait for price to get to an ultimate trade entry, then we engage the market. So on a beautiful chart like this, where necessarily do you think price should reverse into for you to engage the market so that you have a low risk trade entry? And beautifully, it is inside this fair value gap resting in here. Okay, it is inside this fair value gap resting in here. This imbalance in here. That's where you should hunt for your entries. Okay, your entries to take your sell side. To take your sell entries. This imbalance in here. So should price retrace back into this, you engage the market. Okay, and then where necessarily do you put your stops? As usual, above the highs, and then it's a good deal. Okay, so this is for education purpose. You can go to your chart and look at it for yourself. I'm just giving you an insight of how to analyze the market. So on the weekly, my opinion for the week is that we are looking for price to we are looking for lower prices within this week, insofar as we've had price on the monthly time frame trading into this breaker. I'm looking for price to reject down. More often, I'm looking for price after it has traded into this high. You know, it traded also into this beautiful small fair value gap resting here. Okay, price closed in on this fair value gap in here, and awesomely I'm looking for price to bounce off this area and then trade down. Okay, so that is my expectation for the week. You can also analyze the market for yourself and look at how the market is going to play, but for me, this is what I see now. Clearly on the chart, this is what I see. Do not overcomplicate the analysis. Do not overcomplicate the chart. Take them as they are, and you do well on the market. Okay. So see you in the next analysis. I'm bringing you analysis on other volatility pairs. See you in the next video. If you like this video, please give me a thumbs up to encourage me to record more videos, you know, to give you more updates. So kindly give me a thumbs up if you like the video. If you like my analysis, kindly give me a thumbs up. Give me a comment in the comment section to encourage. All right. So I wish you all the best in your trading. Until we meet again in the next video. It's shalom.